What is going on, everybody? This is Andrew from DeFiancy. All right, guys, we're just going to jump straight into this per usual. Right now, we're approaching the market close for legacy markets. And today has been sort of similar to yesterday, just pretty much sideways, choppy. We did get a nice bounce here off of yesterday's lows about an hour ago. But now we're pretty much just midway between the daily high and the daily low. This is kind of what was expected. The market is really just trying to digest what has already happened. We talk about how the markets like to range most of the time, actually, and you get extensions after ranging. So if we look, we had this big extension here that followed quite a bit of ranging. And this is likely to be the case really going into most of the year. Range, expand, range, expand, but the overall direction is up, most likely. So just another day that's very scalpable if you're day trading, and really just setting up the next leg, I think. Now, what the market reacted to initially today, we're going to talk a little bit about this, was GDP and also unemployment claims. So these were the two data points that came out earlier this morning, about 8:30 Eastern Standard Time, that really, I think the market really liked to see this. It had a really nice reaction when GDP came out. Now, some people will interpret this differently. So when it comes to this data, it depends on your time frame, really, and honestly, what your just overall thesis is, whether it's good or bad. Some people want to see a lower GDP because they think that that's going to motivate the Fed to lower interest rates. But I think the wiser investor realizes that the Fed has already really made their mind up, most likely, what they're going to do. And GDP being positive is not going to change the Fed's policy, at least this year. And that's my opinion. I think that's the wiser opinion, that people are thinking about. They're overthinking it, really, in my opinion, when it comes to what the Fed is going to do. We're not going to go too far into that, but I think it's bullish that GDP is higher than expected. It was about 1.3% greater than what was expected. I think that's very bullish going forward. So you have inflation that's coming down / staying down, whatever you want to call it. GDP is up, and unemployment is it came in a little bit more. U.S. unemployment claims about 15K more than expected, but that's kind of negligible, honestly. So I think the overall situation is pretty bullish. When you look at the economy going forward. Whether these numbers are true or not, that's a whole nother discussion. People can argue about that, but we're just going to take them as face value. At least it looks like the market's going to take them at face value. So what do we have tomorrow? Looks like we have core PCE, which is, according to the Fed, their preferred metric when it comes to inflation. It's showing you like how the consumer is spending, which has an effect on inflation. And that'll probably move the market for a little bit. But I think it's going to be much like really the last few weeks, where these data points come in, and even if they're not even if they come out in such a way that is not necessarily good for the market in the short term, the market just recovers and it continues to go up. I think that's going to be the case for pretty much any data point that comes out, to be honest, unless it is so significant. Like, let's say, if CPI comes in way hotter than expected, or maybe if NFP came in really hot or cold, maybe that would change the overall direction for a little bit. But it really looks like this market is mainly focused on earnings. Global liquidity is good. We talked about this yesterday. And there's an appetite for risk. Let's just say that. So when the market is moving like this, you have to look at it like it's a train, because that's really what it is. It's not going to just slow down for anything. Yes, it might temporarily, go sideways, or maybe it pulls back for some of these data points that come out temporarily, but then it just gets bought and then it keeps going. And I'm not saying this is going to last forever, but while it's like this, you just kind of have to assume that the train's going to keep going. And we are in a very bullish trend, and it's better to realize that early than later. Okay, let's talk a little bit about election years. So one of the reasons why I've been quite bullish, even when the markets were looking pretty crappy, in September and October of last year, or early October, is because election years are typically really good for stocks, for risk assets in general. If you look at this, I don't know if you can see this, maybe I can zoom in. If you take all election years, going back to 1928, the average return is 11.3%. That's pretty good, okay? If a Republican was elected, 15.3. If a Democrat was elected, 7.6. So election years are typically very good. So let me see what this says. So there have been 23 elections since the S&P 500 index began. In these election years, 83% of those elections provided positive performance. That's a pretty astounding metric there. Okay, so we can talk about why this happens, and I think it's kind of obvious that it's political. The economy, the government does things to ensure that the economy looks good, that there isn't a market crash, whatever. They have tricks they can use, the Treasury and the Fed. I'm not saying that they're a political organization, but it's kind of hard to argue that the government wouldn't want the economy to look good during an election year, right? Because if the economy doesn't look good during an election year, you can almost guarantee that the president in office will not be reelected, right? I mean, this is just common sense. So, yeah, I think this is very important for this year. And it happens to be coinciding with a bounce or a bottom in global liquidity in late 2022, and now we're on the upswing. So it's really a perfect situation, in my opinion. You have an election year, which are typically bullish. Global liquidity has bottomed and is now bouncing up. And you just got out of a bear market, in terms of risk assets. That was like 2 years, okay? Depending on crypto more like 2 years, stock market maybe it was more like a year. But you get what I'm saying. Typically, you want to be bullish when the pendulum starts swinging, and you don't want to be bullish after it's been swinging a long time, right? So I think it's a perfect storm here for risk assets going forward. Let's talk a little bit about some altcoins here. One of the altcoins that I really like going into 2024 and really into 2025 and beyond is Solana. So we talked about how it had this huge accumulation range here, super huge breakout, an absolutely just ripped face for like 2 months. And now you're getting this much needed consolidation before the next leg up, which I think is probably 140 to 200. And I think it'll go there pretty easy based on the fundamentals. But I think we're now approaching, if we look at our moving averages when we're on the daily time frame, we're starting to get into really good buyable levels. I think anything around 75 or lower is an obvious place to start adding Solana. It could go as low as 55 or below around that area, and it'd still be quite bullish. It would only when it would get under this level should you really be concerned. I don't think that happens for the reasons we've been talking about in this video and the last. But yeah, I'm just wanting to put this on people's radar. I think this is a really good opportunity to start looking to add Solana. I'm going to show you another crypto asset that's been doing pretty well. Maker has really not pulled back. You had this huge move, and while a lot of altcoins have pretty much retraced a lot of the move that occurred over December, Maker's pretty much at the high here. And that's pretty interesting, honestly. And I think this is because the fundamentals are so strong for Maker versus its valuation. It simply just doesn't make sense for this not to be significantly higher. When you look at what its role is in crypto, which is it's a giant in the RWA space, which is real world assets. It has effectively a monopoly on chain, or what I should say is like decentralized stablecoins. And we can argue about how decentralized it is, but it is the most decentralized large stablecoin by a long shot. Maker is just a very impressive protocol. And if there's going to be a use case for DeFi going forward, DeFi adoption, Maker is the obvious candidate for early adoption within DeFi. So I think that explains the price action here. So I think we need to look at Maker and we need to extrapolate from that to other altcoins, okay, like AAVE, which doesn't have quite as a bullish chart yet, but this is textbook accumulation, guys. I think we'll be making a video here in a few months talking about the explosive price action in AAVE. If you look at it, it's just right now ranging, right? It's in bullish accumulation. If you go look at a lot of other assets that have done really well over the last few months, they did this for quite some time. So I think this is inevitably going to be like Maker, where people that are wanting to get into the crypto space outside of Bitcoin and Ethereum, they start looking at these protocols that actually have real revenue, real business model, real users, real use case. They're going to come across AAVE. Okay, just ask anybody that really does a lot of DeFi, especially if they have a lot of money on chain. They probably are familiar with DeFi, or I'm sorry, with AAVE. So we've talked about these in the past, but I really think that these are going to be some of the first coins or some of the first projects truly adopted by TradFi or retail, maybe a combination of both. It's coming. I mean, you can see it. The writing is on the wall. Tokenization of assets. Well, the people who have mastered that so far, or at least who are pioneering that within the crypto space, Maker, AAVE, and a few others. We're going to keep this video short, guys. I think that's all we have for today. Until next time, happy hunting, friends.